Welcome to Moneyman Investments. I want to briefly talk about our investment framework and what we use to identify solid, strong stocks in the market and create great portfolios. But before that, standard disclosures. Moneyman Investments is a SEBI registered corporate research analyst with registration number INH 0000253882 and BSc enlistment number 7017. Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSE, and certification from NISM in no way guarantee performance of the research analyst or provide any assurance of returns to investors. Please read our detailed disclaimer on our website www.moneymaninvestments.com. Now coming to our investment framework. These are a set of protocols that we run all securities through. We filter them so that we arrive at the best possible choices for our final portfolio. They are split into some rejection protocols and some selection protocols. Now there are multiple ways to make money from the markets. This is what I have arrived at after a lot of trial and error, after understanding what works, what doesn't work. And eventually this has really helped me a lot, and that is what I translate for all the money managed by me. So we start first and foremost with the macros, the market, and our proprietary quant market map, which I've finished over many years. People who are part of our free WhatsApp channel know how accurate this quant market map is in predicting turning points in the market. So first and foremost, we determine if the market is good enough to be invested in. Should we go bold in this market, or is the market just running cold and we should sit out of it? Is it range bound? Is it trending? Whatever it is, first we try and understand what the mood of the market is. And the first protocol is where we understand the macros, the market, and we use our proprietary quant market map to map everything. Then we run our shortlisted securities through a fundamentals protocol, which is again a rejection one, where we try and eliminate companies that are not earning well. However, we also try to look out for companies that are just turning around in their earnings growth or earnings life cycle. Those are the best time to catch companies. So we run all our shortlists through a fundamentals protocol. After that, we go to the technicals protocol. Now we firmly believe that there is no point in investing in great fundamentally strong stocks if they're not technically set up well. It is about what to buy. It is also about when to buy them. So that is where the technicals protocol comes into picture, and we look at the stocks which are set up very well to give good growth. Just being set up is not the entire story. Now these are all our rejection protocols. Then we come to how do we select great stocks from this list, and that is where strength comes into play. This is one of our most important protocols, because we first determine if the stock price movement is experiencing any kind of strength, any kind of momentum. Without that, your money is as good as lying dead in the water, and we don't want to do that. We want to keep rotating our capital efficiently, and one of the ways to do it is to identify strength in the market, identify strength in securities, and align with that strength. Our next protocol is the sector. Most of the times in a great trending market, what we've noticed is that there are 3-4 sectors which are leading the entire market, and we always want to be aligned with the leaders, with strength, with the strongest sectors, with the strongest stocks. So we try and select the strongest sectors and the top strongest stocks from that particular sector while going about identifying a solid portfolio. These two selection protocols are they form the entire core of our entire money management system. Then comes the question of allocation. The allocation protocol is extremely important because it helps us to identify how much do we want to allocate. We try and run concentrated portfolios as much as possible. You will never see us having 50 securities, 100 securities, 100 names in our portfolio. Warren Buffett said that diversification is for people who don't know what they are doing. And I believe that we know what we are doing when it comes to managing money. So we try and start building allocation into the strongest stocks belonging to the strongest sectors. Again, we do not jump into the market in one shot. We build these allocations over a period of time. Once we do that, that leads us to our solid portfolios, robust, agile portfolios that we make for different funds that we operate. Now, there will be many times that we will not be 100% invested in the market because this particular set of protocols allows us to slowly scale into the market, slowly scale into risk, and slowly build our portfolio. But once that is built, we strongly believe that those are going to be strong portfolios. This is what I wanted to tell you about our investment framework. There is a lot of information on our website. Please visit our website www.moneymaninvestments.com for more details. Thank you so much for your time.